We're building something here, a complete journey into algorithmic trading from the very basics all the way to a professional level. If you are looking for shortcuts, quick profits, or easy money, this is not for you. Because this series is about depth, about understanding, not guessing. And we're going to build your foundation, then take you to the intermediate level, and eventually turn you into a disciplined, system-driven trader. And no, this doesn't happen overnight. So if you're serious, if you're ready to learn this the right way, stay. Hit that subscribe button. Today is day 4. Let's continue the journey. Welcome back to the series. If you've been following along, you've already started building your foundation in algorithmic trading. Today, we're going to talk about something extremely important: trading styles. Because before you build any algorithm, before you write a single line of code, you need to understand one thing. What kind of trader are you trying to become? Think of trading styles like different professions. A surgeon, a pilot, and an athlete, they all require discipline, but their routines, tools, and decisions are completely different. Trading is the same. Not every strategy works for every person because every trading style demands a different mindset. At the core, trading styles are defined by one key factor: time. How long do you hold a trade? Seconds? Minutes? Oh, day? This single decision changes everything from risk to strategy to psychology. Let's start with the fastest style: scalping. This is where trades last for seconds to a few minutes. Scalpers aim to capture very small price movements, but they do it frequently. It's like picking small coins again and again. But here's the reality: scalping is extremely demanding. It requires high-speed execution, low-latency systems, and intense focus. In algorithmic trading, scalping strategies rely heavily on automation because humans simply can't react fast enough. Next comes intraday trading, also called day trading. Here, trades are opened and closed within the same day. No overnight risk. The goal is to capture larger moves compared to scalping, but still within a controlled time window. Intraday trading is like a daily job. You enter the market, do your work, and exit before the day ends. For algorithmic systems, this style is popular because it avoids overnight uncertainty like news or global events. Now let's move to swing trading. Here, trades last for days, sometimes even weeks. The goal is to capture bigger price movements instead of reacting to noise. You ride the wave. Think of it like surfing. You don't chase every ripple, you wait for the right wave and ride it with patience. Swing trading strategies in algorithms often rely on trend detection and momentum indicators. Finally, we have position trading or long-term investing. Here, trades last for months, even years. This style focuses on the bigger picture, ignoring short-term fluctuations. Position trading is like planting a tree. You don't check it every hour, you give it time to grow. In algorithmic trading, this involves macro-level strategies, fundamentals, and long-term signals. Now let's compare all styles together. Scalping, fast, intense, high-frequency; intraday, structured, daily routine; swing, balanced, medium-term position; slow, long-term vision. Each comes with its own advantages and challenges. Here's where most beginners go wrong: they try everything. Scalping today, swing tomorrow, long-term next week, and end up mastering nothing. Consistency matters. You don't need all styles, you need one style that fits your personality, your time availability, and your risk tolerance. Ask yourself, how much time can I give daily? Can I handle fast decisions? Am I patient enough for long-term trades? Your answers will guide your style. Now here's the important connection: your trading style directly affects your algorithm design. A scalping bot looks completely different from a swing trading system. Different data, different logic, different execution. So before you jump into coding, you need clarity. Because coding without clarity is like building a machine without knowing its purpose. The goal of this series is not just to teach you trading, but to help you build a system that matches who you are. That's how consistency is built. In the next video, we'll go deeper into how these trading styles translate into actual strategies, and how you start thinking like a system designer, not just a trader. If this video added value in your life, hit the like button, subscribe to the channel, and share it with your friends.